All right, it is now time for Mike on the Money. I'm here with Money Mike Giordano, financial advisor with Williams Wealth Management. All right, so many of you may be thinking about selling your home or buying a brand new one, but unfortunately we haven't received the lower interest rates that we had expected. So we want to set up the current market conditions and then discuss how home buyers can best position themselves financially. Also, this is where you come in here. Interest rates have also spiked. Seems like things are all over the place. What's going on, Mike?
Yeah, Rashad, we came into the year thinking, we're going to get all these interest rate cuts, and that's going to filter into mortgage rates coming down. And they came down for a little bit there, but then all of a sudden, inflation just kept popping up. Last week got another hot inflation number, and now every Fed member's come out, including the chairman, Jay Powell, basically said, we don't know when we're going to be able to cut rates. We need more confidence that inflation is certainly coming down to that 2% goal. And we don't know now whether that means 3 months, 6 months, whether we're getting one cut, two cuts this year, or we're going to have to wait until next year for cuts. And if the Fed's not cutting, that's going to feed into all interest rates, including mortgage rates.
So then it raises the question, should potential home buyers wait until some of these rates go down?
It depends. It really depends on what your situation is. If you've penciled out all the numbers, what I always tell people is it's a fool's errand to predict what's going to happen with interest rates or with home prices. I mean, home prices really, even though interest rates have skyrocketed, home prices haven't really come down at all in a meaningful way. So you don't really want to play the game of trying to predict what's going to happen. So what you want to do is look at pencil things out on paper and figure out, do I have the money to afford the home that I really want? If it's a home that you're like, I'm passionate about this home, really want to have this home, all the numbers work out, yeah, go buy the home. If it's a situation where you're like, I'm really stretched, it's gonna crowd out a lot of our other purchases, I don't think we can make the numbers work, it's a home that I'm, suspect about, then in that case, wait, save up some more money, put yourself in a better position.
And if you all are like me, you scroll Zillow a lot, you see a price that looks attractive to you.
Yes.
Can you talk about some of the other costs that you don't see right away before you sign the contract? What else do we need to consider?
Yeah, I mean, obviously when you're buying a home, you're looking at what that mortgage price is going to be, right? How much is my monthly payment going to be? But what you forget about is that there's going to be maintenance costs, whether it's inside the house, outside the house. You may pay higher property taxes than the previous owner because you're going to be buying the home in all likelihood for a higher amount. So you got to factor in those higher property taxes, higher insurance costs because of everything that's happened with inflation. So there's a bunch of different costs there, HOA fees as well. So you just want to make sure that you have a clear picture that I can afford the home, and when I get in that home, I can afford to furnish the home, do everything I need, renovations or other maintenance.
And then let's talk quickly about mindset. So potential buyers, should they shift their minds and think like sellers? And if so, how does that work and how should you approach that?
Yeah, I tell people all the time, when you're buying assets, you always want to think as if you're selling the asset and try to figure out, okay, am I going to be able to sell it for more than I bought it for? So it's a little bit, paradoxical when you're like, I haven't even bought the house, how can I think about selling the house? But what you want to think about here is, how long do I plan to be in this house? Is this a forever home? Is this a home I just want to be in for a couple of years? Because early on, you're not going to build up a ton of equity, but you got to think about when you sell the house, you're going to have closing costs anywhere in the range of 8 to 10% in all likelihood. So you definitely want to factor those closing costs in before you buy the home, saying, okay, I want to be in this place for several years in order to build up enough equity so that all the numbers work out well.
All right, Mike, thank you. Mike Giordano helping us out once again this week. Thank you again. We'll see you next week.